Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is Tuesday. It is May the 9th. I actually wanted to make a video about Devon Energy, and I have a presentation on Devon that is almost ready. Devon reported an amazing first quarter. And I've been buying Devon, by the way, but it says adjusted earnings, $1.46 per share, surpassed the consensus estimate of $1.39. Revenue rose marginally year over year to $3.82 billion and came in above the street's expectations of $3.43 billion. An exceptionally good quarter by Devon Energy. Lots of good stuff going on about Devon as well, but I cannot talk about Devon tonight. I need to talk about the elephant in the room, and the elephant in the room for us tonight is Icahn Enterprise Partners, IEP. Now, I have shared with you before, and I just recently made a video where I said I have a long position and a large position. In fact, I have several long and large positions in Icahn Enterprise Partners, IEP. But I've been exiting, and I know some people have been buying, and all strengths to you and good luck to you. I made this video, which is about 7-8 months ago. I think it was in September of last year. You can find it in the library if you want to take a look at it. You'll find it easily because there's Carl Icahn's pretty face on it. 16 minutes and 45 seconds if you want to check out this one. And at that particular time, I was saying why I buy Icahn. And I explained in reasonable detail that I'm buying Icahn as an older guy because I want the dividend, I compound the dividend, and basically just buy more shares as I receive my dividends. That was kind of my investment thesis here. I thought, and I still think, that the dividend is reasonably safe. As I mentioned in the previous video, Icahn has been paying dividends solidly for 71 quarters. So it's almost, 20 years or so, close, 18 and a half years or so of dividend payments. So I don't really have any standing or grounds for thinking that the dividends might be at risk. But what happened was they were meant to report their earnings last Friday, which was May the 5th, and they ended up postponing it to tomorrow, which is Wednesday, May the 10th. And I think the reason why they did that is because they wanted to get their ducks in a row and get their legal defenses lined up and make sure that they have a story to tell, and maybe they would even hire a PR firm, and in addition to the lawyers, to figure out how to respond to the Hindenburg research report that basically just crushed Icahn's shares last week. Now, being a sort of middle of the road kind of guy, like I don't want to punt any stocks too much, and I don't want to scare anyone either. I just want to be as logical, rational, and straight down the line as I can be, sort of middle of the road, if I can put it that way. I look for reasons why I should or should not be in a particular stock. And so I found this article online, and this is what I'm actually going to share with you, because instead of doing Devon Energy, I'm going to talk a little bit about Icahn Enterprises. And this particular research paper, which was published on May the 5th, which is Friday, by Porter and Company, is a company that I'm not necessarily familiar with. So what I did first was to say, who is Porter Stansberry? Now, if I go back to my webpage for just a minute, and then what I'll do is I'll go to the page next door to my YouTube video and share with you who Porter Stansberry is. So Porter and Company, and this is from their own website, over the past 25 years, Porter Stansberry has built a reputation for doing some of the most important work in the financial advisory business, such as predicting the collapse of Fannie and Freddie Mac, the bankruptcy of GM, all the good stuff he's done, recommending shares that you should have bought. And if you had listened to him, you would have made tons and tons of money. He routinely sits down with diverse financial, business, and government thought leaders like Ron Paul, Steve Forbes, Julian Assange. I don't think anyone's sitting down with Julian Assange, who apparently is still in prison for all the wrong reasons. But anyway, this is from their website. So the website is called porterandcompanyresearch.com. You can see it at the top here in the URL, about Porter and Company. So this is how they self-describe. So I thought, okay, so in the interest of fairness, before I share with you what Porter and Company write about Icahn, let's first look at Porter and Company and go back to this downloaded PDF I made. And I went to Wikipedia, which, as you guys know, is the bastion of free speech. But to be fair, I don't think Wikipedia would have altered the description of Porter Stansbury for the purposes of my video. So I'm going to go with, I'll just go out on a limb here and say this is probably all correct, but hey, it's Wikipedia. So if I give you misinformation or disinformation, please blame them, not me. Frank Porter Stansbury is the author of the monthly newsletter, Stansbury Investment Advisory, which covers investments and investment theory in commodities, real estate, and the stock market. Stansbury is also the creator of the 2011 online video, The End of America, in which he predicted, I guess, 2011, the imminent collapse of the United States. One can argue that the current administration has proven him to be correct, but that's a separate issue. In 2002, the SEC brought a case for securities fraud against Stansbury, and a federal judge fined him $1.5 million in 2007, when $1.5 million could still buy you 5 or 6 houses. And today, $1.5 million can buy Joe Biden an ice cream. In 2002, Stansbury sent out an email offering to sell for $1,000 the name of a company purported to obtain a contract to dismantle nuclear weapons for Russia. The Securities and Exchange Commission sued him in 2003 on this basis for his newsletters containing nothing more than baseless speculation and outright lies, and accusing him of a scheme to defraud public investors by disseminating false information in several internet newsletters. So, the guy has maybe a slightly checkered past, but I'm going to sort of gloss over that and just pause there. I mean, let's go into his actual article. So he wrote, this was on May the 5th, so it was Friday when Icahn was meant to report. He said, is Icahn Enterprises a Ponzi scheme? So he gives a little bit of an introduction here, talks about Hindenburg, who obviously published the research that crashed IEP stocks. But let's go into the report. It's about 11 pages, but I've highlighted a few sections so I don't have to read the whole report to you. We first recommended Icahn Enterprises to our paid subscribers in December 2022 in a report we called Better Than Buffett plus a 16% dividend. Now, the video I just showed you a few minutes ago that I made, I think it was in September of 2022, said why I am buying Icahn, and I was specifically buying Icahn for that 16% dividend. In fact, if you do watch that video, as I go through the financial slides from my brokerage account, I make mention of the fact that they're carrying about 42% debt, I think it was at the time. The stock was yielding about 15% because it was $8 on a $50 stock. As a quarterly dividend, it was paying $2 per unit. I talked about the current ratio and the interest payments required and the operational interest being short. So there were a number of red flags, but at the end of the day, my thesis was I am buying this for the dividend. I've been in the stock for a long time, and obviously I was compounding my dividend, which was quite nice at 15% at the time. Shares of Icahn Enterprises have collapsed over the last few days following a sharply critical report from well-regarded activist short seller Hindenburg Research. To be fair, well-regarded activist short seller Hindenburg Research. You have to give compliments where compliments is due or are due. Hindenburg Research did a really good job criticizing Icahn Enterprise Partners and Carl Icahn himself. And we'll have to see what they say tomorrow in terms of whether it's true or not. By the way, the conference call is at 10 o'clock Eastern time in the United States. You can sign up for it online if you'd like. You just go to Icahn Enterprise Partners website, and you can sign up to listen to the conference call. So this is Stansbury, so Porter and Company, basically looking at Icahn stock coming down from around sort of the early 50s to where it crashed to about $30 on Friday last week before it bounced back up again by a few percentage points. And if I may just pause here for a second, because this is just pure math, right? It's got nothing to do with the stock. If you lose 50% on a stock, and let's make it really easy. If you have a stock that's trading at $100 and it drops 50%, then that stock is now trading at $50. For it to get back to $100, it would need to go up 100%, right? $50 it's trading at, it needs to add another $50 just to get you back level again and trade back at $100. So Icahn has a long way to go with IEP in order to get back to sort of $55 or thereabouts. And just a year prior to that, it was trading about $77. So it's a long, long way. It's now down more than 50% from that high of about 70-something dollars. Way, way more than 50%. In December 2022, we added Icahn Enterprise Partners, IEP, to the big secret on Wall Street portfolio, on the basis of Icahn's investment acumen and the company's hefty 16% dividend, right? That was my investment thesis too. I say was because it no longer is. To summarize, Hindenburg is more or less calling Icahn a fraud. Now, these are not my words. These are not even Porter's words. These are really Hindenburg's words, because he's saying the whole scheme is a fraudulent scheme. They allege he's been losing money for investors for nearly a decade. Well, that is true, and making up the difference by selling units of his partnership at inflated prices, which included from Hindenburg an accusation aimed at Jefferies Investment Bank that they are the book runner, effectively punting the shares in the marketplace and helping to inflate the IEP prices. In fact, they are the only analyst who has a buy rating on IEP. Hindenburg described this strategy as Ponzi-like. Icahn has generated one of the best long-term investment track records in history. Yeah, no question about that. The guy has done really well. He's also done well for me. As I said, I've been compounding those dividends for a long, long time, but not anymore, guys, not anymore. Is Icahn one of the greatest investors of all time, or a fraud? Is IEP a legitimate holding company, or is it a Ponzi scheme? Asks Porter in reviewing Hindenburg's report. Hindenburg claims that Icahn's investment portfolio is down 53% since 2014. Well, it's not a claim. That is in fact exactly what happened, and that the company has burned almost $5 billion in cash since then. That is also quite correct. In fact, the number that it has burned is around 4.8 billion or so. And during that time, of course, it has been steadily paying dividends. So since 2014, so about 10 years, Icahn has paid out, I think from memory off the top of my head, about 1.9 billion in dividends, while it has been burning through cash at a rate of almost $5 billion during that same period. Porter says this is only partially true, because Hindenburg's analysis tracks IEP's currently publicly traded investments would make up less than half of the company's assets. Now, that is good or bad, depending on how you look at it, because when you think of Icahn or IEP, and they say it's less than half of the company's assets, and you look at a peer, not that it's necessarily similar or the same, but let's just say Berkshire Hathaway as an example. If you look at Berkshire Hathaway's assets, regardless of the ownership that Warren Buffett has in Berkshire Hathaway or Charlie Munger, the companies that they hold are stellar, blue chip, solid companies, right? So their investments include companies like Apple, Bank of America, American Express. They have large holdings in Chevron, Coca-Cola, etc. So there's a lot of good stuff in Warren Buffett's Berkshire Hathaway portfolio. And the same isn't necessarily true of Carl Icahn. In fact, the most significant holding that he had over the past few years is Occidental Petroleum. Most of the other assets in his investment portfolio that we know about are sort of marginal, gray area companies. They're certainly not overwhelmingly, blue chip, high value market cap companies or whatever. These are like very, very obscure almost type companies like Cheniere Energy or Southwest Gas or companies like that. And then they go on to say there's nothing mentioned about the performance of the majority of the assets at IEP. The more appropriate way to measure the outcome of his shareholder activism is the return that is earned when Icahn sells. Now, that is an interesting comment in itself, but not necessarily applicable in this particular instance. The majority of people who are entrepreneurs make their money when they exit. They don't actually make their money sort of while they're working. So if you think of an example, and let's think of a well-known entrepreneur. So let's say someone like Elon Musk. He might work for Tesla and he might work at Tesla, and his earnings might be zero, right? So sometimes people say rich people don't pay any tax. Well, sometimes they don't pay any tax because they have no earnings, right? If you don't earn a salary, why should you pay income tax? I mean, that would be a contradiction in terms. How can you pay tax on income, which is income tax, if you don't have an income? So many, many times entrepreneurs work for nothing or for a pittance or for a relatively small salary, but they make their money on exit, for instance, if they sell their company or otherwise go public with the company and invite investors into their company. But you can only do that and make that money or make that return or earn the return when you sell or when you exit. Icahn has also outperformed the 9.9% compounded returns of Warren Buffett's Berkshire Hathaway over the same period. Well, that is true as well, because Berkshire Hathaway does not pay a dividend, and Icahn was paying 15% to investors. So, of course, it's outperformed, especially if you reinvested those dividends. Hindenburg's claims of Ponzi economics are completely overblown. So Porter does not say they are not true. They just say it's completely overblown. And then he goes on to say that Icahn functions like an investment company. It borrows money and it raises equity capital to invest in undervalued companies. It then applies pressure by taking board seats or talking with the management teams to get the companies to treat shareholders better or to make strategic changes to unlock value. We saw this in Occidental Petroleum, right? You got 3 guys on the board. He was largely instrumental in Occidental Petroleum issuing warrants. He really put pressure on the company to change their strategic way they looked at the operational costs, their production, etc. So he did good work. So as an activist investor, he is second to none. He does really, really good stuff. Finally, Hindenburg's most exaggerated claims. So once again, Porter does not say that they are not true. They simply say that they are exaggerated. Focus on the now 25% dividend, which used to be about 15. It was about 15 when the stock price was $50. And now the stock price around $30 is 25% higher than the previous or about $40, the stock price, previously due to the decline in the share price that IEP pays and has paid for 71 straight quarters. So more than 18 years. Hindenburg says the dividend isn't sustainable. We disagree. Well, actually, I do agree to a point, or at least to some measure, that this dividend is not sustainable. Icahn has been burning more cash and paying dividends at the same time. Those two things are also a contradiction in terms you cannot continue giving money back to shareholders when you're not making any money and you're not making a profit. Porter says the fact is IEP currently holds $2.3 billion in cash and the dividend only costs $226 million per year. Well, mathematically, that is correct, but that assumes that $2.3 billion in cash is just sitting there waiting to pay people dividends, and that's not how dividends work, because during the year, that same year, the company also has to function, has operational costs, has interest costs that it needs to carry on all its debt, and it has 42% debt to capital in terms of its debt capital ratio. And Hindenburg is exaggerating. Again, Porter is not saying it's not true. They're just saying they are exaggerating the impact of the dividend rate because it is ignoring the fact that Icahn takes his share of the dividends of the 85% of the company that he owns in more shares, not cash. Now, you can argue that's good or bad. On one hand, you can say because Icahn takes his dividend in units, well, they're not shares, they're actually units, you can say he's heavily invested in the company and therefore is incrementally motivated to ensure the company's success. On the other hand, you can say he's taking the dividend in in units because the company does not have sufficient cash to pay him the dividend based on the 85% of the company that he owns. So it's a little bit of a catch-22. In contrast, Icahn Enterprises uses its dividend to create regular flow of income for its investors. Well, that's where I was, right? And that's why I keep saying I was invested in Icahn because of the dividend. If I feel the dividend's at risk, there's no motivation for me to hold the stock long any longer. To smooth out the enormous volatility of an activist hedge fund, a fund that has earned billions in profits over the last 20 years. Quite correct. Hindenburg's claim that the shares are highly overvalued might be true. In fact, it is based on any metric that you can apply. The units, they're not shares, are overvalued. As of Thursday's close, and this was after the crash, IEP was trading at a total market capitalization of roughly $11 billion, which was still 100% premium to its last reported net asset value of $5.6 billion for the year end 2022. And that $5.6 billion, Hindenburg says, is overstated, as we talked about just a minute ago when I said entrepreneurs typically make their money on exit. So if Carl Icahn sold this for more than $5.6 billion, it's probably doubtful that he could sell it for like, 12 billion, whatever those assets are, right? Before the recent sell-off, it traded at a value of 200% premium to net asset value, grossly overvalued as a stock, beautiful dividend, and that's one of the reasons why I was holding Icahn Enterprise units. Typically, closed-end funds trade at a slight premium or discount to net asset value. That's the norm. So having a 200% premium to net asset value is ridiculous. We think it's reasonable to expect investors to value IEP more highly than similar investment companies such as Bill Ackman's, who was, of course, also mentioned in the Hindenburg report. First, Icahn is a better investor. Well, that's kind of like a subjective statement, because if you make that statement, you should probably say based on what? Second, he owns 85% of the company, a higher total than the others. In other words, he owns more of his company than what Bill Ackman owns of, Pershing. And third, he pays a substantial dividend upon which investors have relied for more than a decade, which includes moi. As such, we would normally recommend buying more shares to take advantage of the opportunity to buy a great investment manager at a deeply discounted price, right? This sentence, read it again. We would normally recommend buying more shares to take advantage of the opportunity to buy a great investment manager at a deeply discounted price. But there's always a but. There was one serious allegation in the Hindenburg report, and one that is worth discussing. Icahn has personal debts, and his company, in other words, the 85% that he owns in Icahn Enterprise Partners, is the collateral for that debt. Icahn has taken out a huge margin loan against 60% of his shares in Icahn Enterprise Partners. Porter says this is like putting up his house, or most of his house, as collateral in a bet. And we don't know the details of what Icahn bet on, only that it was personal. So what you have here is a multi-billionaire who owns 85% of a multi-billion-dollar company. And of the 85% shareholding that he has in that multi-billion-dollar company, he has pledged 60% of it as collateral against personal loans. This is not a fact that's disputed. This is just a matter of fact, right? So if you're comfortable with this, that's great. If you're not, be very, very cautious. I commented to several people in the comments on that last video that I made on Icahn that, good luck to you if you're buying more at the lower prices, but trade with caution, man. Be very, very careful. We cannot know the details of what Icahn has bet on, only that it was personal. It includes 181.4 million depository units that was pledged as collateral to secure certain personal indebtedness. I can't imagine what he took out these margin loans for. So maybe he's playing the market on the other side of the ledger. I'm not sure. Sales of a substantial number of depository units held by Mr. Icahn and his affiliates could have a negative impact on the market price of our depository units. Likewise, the market may anticipate sales by Mr. Icahn or his estate, even if Mr. Icahn or his estate is not selling or has no plans to sell depository units. His estate has been designed to assure the stability and continuation of Icahn Enterprises with no need to monetize his interests for estate tax or other purposes. Except perhaps having to pay back the loan. His estate has been designed. What that means, his estate has been designed. That means that in the event that Carl Icahn were to pass away, and unfortunately that's also just a matter of fact because it's as sure as life and death, his estate has been designed, right? So in other words, what they've done is they've structured a deal to shield some of the claims that might happen against the collateral that he has pledged in lieu of those margin loans. Mr. Icahn has advised that he and his affiliates have sufficient additional assets to satisfy any obligations pursuant to these loans without recourse to the depository units, and he has no need or intention to allow foreclosure on such collateral, and that he is current on all his principal and interest payments with respect to those loans, and there has never been an event of default under any of these loans. Porter continues, and I'm going to conclude this here. We also think the facts present extraordinary risks for outside investors. That would be us. We're left trusting the word of one of Wall Street's greatest legends, and that is a risk that is impossible to handicap. As such, we can no longer recommend you buy IEP. Now, you can say, if the recommendation is that you should no longer buy IEP, but you already have a long position, you could obviously hold IEP. If you want to exit the position, you have a significant challenge. And it's not an easy thing to do, because what you're going to have to do then is perhaps look to do some tax loss harvesting, because you will eat a loss on Icahn Enterprise Partners if you sell. Unless you are absolutely lucky and blessed with perfect timing, and you bought it on Thursday morning last week at the low, and now you have the ability to sell it. Like at one stage it was trading just below $30 per unit. So if you bought it for, let's call it $29 per unit, and then today it closed at like, $38 a unit, that's a nice uptick for you. Then you could probably exit and just take some profit. For most people who are long IEP, you're going to eat the loss. If the loss is not too great, you could just exit the position, eat the loss. Arguably, a paper loss is sitting on the books already as a loss anyway. So you can say, hopefully it bounces back. And that'd be great. If you are long and it does bounce back, that's great. If you exit and it goes up, then you probably arguably don't care anymore, because you no longer own it. And if you hold on to it and it goes down, can you tolerate that? So with the extraordinary risk that you have in Icahn Enterprise Partners now, I'm not sure that it's actually a position that you want to be long in at all. For me, there are a number of limited partnerships that pay a really good dividend. I've mentioned some of them in previous videos, including Alliance Resource Limited Partnership. It's a coal company. They pay about 14% off the top of my head. Blackstone Minerals, they pay about 12%. So I can exit and flip my Icahn Enterprise Partner holdings into Blackstone Minerals, Alliance Resource Partners. I can eat a loss because I have a huge gain, which is still an unrealized gain on Occidental Petroleum, where I can sell some Oxy. I don't have to sell it all. I can sell some Oxy, cash the profit, and then sell some Icahn and cash the loss. Then it's a wash. I cannot obviously advise you. I can only just tell you what's going on in the marketplace. But right now, I do not want to buy Icahn Enterprise Partners, and I no longer wish to be long Icahn Enterprise Partners. I also don't want to hold Icahn Enterprise Partners. But if you want to exit this position, then you're going to have to do a little bit of homework to figure out how best to do it as best it's going to suit your portfolio and your expectations. So on that note, this is Rudy saying thanks for watching. Take care. Trade with caution. As always, caveat emptor, right? And I wish you good luck and best of success with whatever you do. Thanks for watching. Bye-bye.